Should I buy now or should I wait till the Fed lowers rates? Should I sell now or should I wait until there's more buyers in the buyer's pool? These are questions that I get asked on a daily basis. If you're anything like the people who reach out to me, then you're asking these questions also. So we're gonna dive into some facts and we're gonna crush some myths and take a look at what the real estate market in San Antonio, Texas is really doing. So when is the perfect time to buy a house? Let me crack this myth here. There is never a perfect time to buy a house, just like there's never a perfect time to have a baby, and I should know because I have 5. Yes, 1, 2, 3, 4, 5. And if I'd waited for the perfect time to have a baby, guess what? I probably wouldn't have any. And I'm so grateful I did. Just like you will be so grateful that you did if you take action and get started on the process of whether it's upscaling, downscaling, adding another property to your portfolio, or first time in home ownership. The best thing to do is take action. That's how we get success, is from taking action. So the best thing to do is start building your team. I'm at your service and I have an amazing team of competent individuals to guide you every step of the way. We're gonna break a myth, okay? One of the most common reasons I get from people as to why they're not gonna buy a house now is they're waiting on the Fed to lower rates. Okay, I used to think this too, many moons ago, that Fed rates were in direct relation to mortgage rates. They're not, okay? Mortgage rates are affected by the Fed, but they're more closely related to T-bills. And I did write a blog about this, and feel free, I'll put a link in the description below. But Fed rates are more closely related to T-bills, and T-bills are the top economists in the world who get together and try to determine what the Fed's gonna do and other dynamics of the economy, and they take all that into consideration. I am not a financial expert, but I do work in real estate and I work very closely to financial experts, and I'd be happy to pass along some referrals if you want to work with the absolute best in the business. But I digress. So if we're waiting for the Fed to lower rates, guess what? We're behind the game, because the mortgage rates are already lowered based on the fact that the experts believe that the Fed will lower rates in the future. So if we're waiting on the Fed to lower rates and then you're going to take action, guess what? It's going to be too late, and all the other buyers are going to come into the market, and then you're going to have a lot of competition. Another reason I get for people waiting is they're waiting for rates to go back to 2%. Guess what? In our lifetime, there is a great possibility of rates never going down. I would say probability of rates never going back to anywhere in the 2% range. And, you know, historically speaking, 6.5 is historically pretty good. I mean, look back in the 80s, people were buying homes at 19%, okay? So if we're taking a look historically speaking, we're actually doing pretty good. Now, if we compare it to 2020 numbers where we were in the 2s, yeah, 6 is a little gut punch. However, just a few months ago, it was in the 7s. I saw people take 8% loans. So we're looking good. I had clients just get approved for 6.25. You know, really a lot of dynamics come into play: your credit score, how much you're looking to put down, debt to income ratio, and then there's always buying down points. So there are always possibilities. I have a client right now who's under contract at 4.5%. Yes, I said it, 4.5%. How did we do it? We negotiated. It's always great to have a master negotiator on your behalf. We negotiated the seller to give a concession to buy down my buyer's points. So we're actually we're in a VA jumbo over $1 million in Chavano Park, beautiful property, and we're at 4.5%. Can you believe it? Can do the same for you. So let's take a look at what home ownership can do for you. I just basically threw a dart at a dartboard. One of my favorite neighborhoods in San Antonio is the Dominion. I picked a place at the Dominion. I did some research on their appraisal district numbers, and let's look at this real data. So back in about 2016, they were valued just over 800,000, let's say just under 900,000, and now they're valued at about 1.6 million. So that is like almost $1 million of equity growth in 10 years just by living in their home. Okay, so the benefit of taking action versus waiting on the fence, right? It's right here in black and white. I mean, living in your home and you gain almost $1 million in equity in 10 years. Yes, please. Now let's look at the cost of waiting, okay? And you'll see down below the lovely photo of one of my loan partners. She's done my personal loans, Hillary Musali of Loan People. I can get you her contact details if you'd like, but it's the cost of waiting. So you can see on the diagram and take a look at the numbers, but we talk about marry the house and date the mortgage, right? And one thing that Hillary offers and many lenders offer is free refi programs. Get in while it's a buyer's market in many areas, where there's not as much competition because so many people are waiting on the fence, and take advantage of you maybe buying down some points or just getting in at 6.5. Get in while the home prices are lower, and then within the next 2 years, Hillary will offer you a free refi. So you can refi and capture a lower rate as rates come down, and it won't have you any out-of-pocket closing costs to go ahead and refi with Hillary. So thanks, Hillary, for the graphic. Lots of good info on that one. In this slide, you'll see months of inventory. This is for all Greater San Antonio. What this means is there's about 5.3 months of inventory. That's a pretty neutral market, but leaning towards the seller side, but it's fairly neutral. In some places like Canyon Lake, for instance, where there's like 10 months of inventory, it's a buyer's market. Some pockets of San Antonio, different markets, and we can explore those. Where is it still a buyer's market? Now, what's gonna happen if rates go down is that's gonna be an extreme buyer's market, and that's where we get to that competition that we want to avoid. Here I want to talk about the balance of buyer's market versus seller's market versus neutral market and what that means for rates, right? So they are connected, right? It's a supply and demand issue. We know in marketing, it's like the first lesson you learn in marketing is supply and demand. So as rates come down, demand goes up, right? More people get off the fence and get into the market and wanna buy. And so what happens is prices go up. So here we are in this sweet spot. I have real-time San Antonio numbers on the board right here. We've got days on market of 63, which is approximately 2 months. So it's from the day the home goes on the MLS to the day it goes under contract is approximately 63, which is a really healthy market. And then close to original list price, there's a lot of room for negotiating. So we're looking at 94%. A home goes on the market for $1 million, probably gonna sell for somewhere around $940,000. So there's a lot of buyer negotiating power. So if we line these up against 2020 numbers, that was like at 101, 102% of original list price to sell price, we're looking at a home going on the market and selling for $1,020,000. So even more than it was listed for. Should rates go back down to the numbers that people are waiting for them to go back down to, we're gonna see that buyer competition come into play. We're gonna see those offers that are above and beyond what sellers are asking for their home. And that's what we want to avoid. We want to come into the market when it's a healthy market and capture the home of your dreams, be able to have a lot of great negotiating power on your behalf and get you into a reasonable rate. 6.5 is very reasonable. And you can always, again, refi down the road. Let me tell a short story. My husband and I bought our home in 2021. We got in at under 2.5%. We were very grateful for, but we were at the top of the market. So do you think we have any equity in our home? No, we've been here for 2.5 years and we have very little, if any, equity in our home. We did capture a great mortgage payment, but we came in at the top of the market when everybody was bidding on houses. So, it's always a balance. It's always a trade-off. So now's the time. So in conclusion, take a leap, get off the fence. Today's the day to start taking action, whether you're upsizing, whether you're downsizing, whether you're adding property to your portfolio, whether this is your first home purchase. Today is the day. Let's start that conversation. Let's take action and start moving forward. Let's at least figure out what you're qualified for. We can always take a look at buying down points or refining down the road, but we don't want you to miss out on that dream home. We don't want you to enter into an extreme buyer's market where prices are out of reach for you. So reach out to me today. I am your Texas Hill Country Luxury Realtor. This is Malina Bercher, 808-217-2700. And until next time, have a beautiful and blessed day.